Are you ready to take your business to the next level? Every day there are countless books and articles that are published offering the key on how to make your business a success. It's easy to feel overwhelmed trying to keep up and run your business. That's why Deb Creer created the Business Power Hour. Keep up on the latest trends, best practices, and techniques for how to make your business a success. Let the Business Power Hour do the heavy work for you.
Good morning, good morning. I am Deb Creer, and I am passionate about giving professionals the tools that they need to make themselves and their businesses as successful as possible. And let's be honest, folks, doesn't really matter what we do if we don't have money. We can have the greatest intentions in the world. We can have the greatest product, the greatest service in the world. But if we don't have money, it's not going to get us very far. And so we're going to be talking with a gentleman today about how to make more money. That's the important thing. Or actually, I should say more importantly, how to not lose money. See, I paid attention. So please join me in welcoming Roger Khoury to our program today. Welcome, Roger. How are you doing today?
Good morning, and thank you, Deb. It's a pleasure to be here.
Cool. I love it. Well, let me read your bio, which I have to tell you is probably the shortest bio anybody has ever sent me.
Well, that's a good thing, I hope.
Well, it's great because then it gives us more time to chat.
I love it.
So Roger Khoury is the founder and CEO of Market Forecasting Academy, which he established to train and mentor investors on his innovative approach to the world's financial markets, and it is called Demand Imbalance Arbitrage. So again, Roger, welcome.
Thank you. Thank you for having me.
Great. Well, I always like to ask my guests how they got to where they are today and how you discovered that this is your passion in life.
Well, actually, I'm going to kind of circle back to what you just said about making more money. And I think one of the problems in my youth was just searching for ways to make money.
Right.
And it's a very logical leap, right? But actually, it works against us because it tends to create very natural blind spots.
Right.
And this is where you probably heard the phrase shiny object syndrome.
Oh, yeah, squirrel.
That's it, right? Now, here's the thing. There's two things that people don't think about. When they think about making money, they look at opportunities that look good.
Right.
And they'll be smart about it. They'll do their due diligence. But then there's always this, I don't know what I don't know. The unknown, the X factor occurs, right? And things don't work out the way they want.
Right.
The other thing is they don't consider, well, I want to be successful. I want to make money. But at what cost?
Right.
What's the price of being financially well off? You could be a doctor, you could be a lawyer, right? But we also know those professions tend to create 60, 70, 80-hour weeks.
Right. And are draining on you both mentally, emotionally, physically.
I found out from a client of mine who's a doctor. I was shocked. He said, did you know that the medical profession, medical doctors have the number one highest suicide rate of all professions? I didn't know that until he told me. I was blown away. And so the idea is if we're going to pursue anything that's going to help us make more money, we should also think about, will this thing take over my life? Will I enjoy it?
Right.
And, am I going to become a slave to it? Or will it actually give me freedom?
Right.
What kind of freedom? Time freedom. There's nothing more valuable to me in my life than time freedom. Having the time to do what I want to do, and not where I have to be relegated to, the 2 or 3 times a year where I have to kind of book and schedule some time off, and get my little vacation. I kid, a lot of times people say, why do you do what you do? How come you're personally involved? Why don't you just delegate things out and just grow this thing, And I don't want to grow. I enjoy meeting with people. I'm an extrovert. So I get a lot of my energy from being with others. And I've been blessed with an abundance of time. I say every day to me is a Saturday, except for Sunday. Okay. And so I've got a lot of time, and my wife and I have abundant time together. And so we enjoy the lives and the relationships of the people that we have in our life. And so, and what I've come to teach and do wasn't any intention. What I developed was for me. It was when I was volunteering a lot during the week at a local church, and I was working with a lot of older ladies, and then after, I don't know, I think it was like a 2 or 3 months, they came up to me and said, don't take this the wrong way. We love that you're here, but you seem like you're doing well, but how is it you're always
Right.
out
Why
here
are
during the
you?
week?
How can you be here?
Yeah, everyone else is
Don't you
working
work,
hard.
young man?
That's exactly it.
Mhm,
And I said, no, of course. And I would explain what I did. Like, really?
mhm,
But isn't that risky and gambling in the markets? I said, no, no, actually, I developed something that's actually more conservative than real estate.
mhm.
Really. And so that went on. I explained that a little bit. Then about a few months later, her son graduated. This one particular lady, her son graduated from high school. And then she comes up to me coffee hour after church and she said, can I ask you for a small favor? I said, what? She's like, I know you love helping and I know you
Mhm,
got a lot of time. Would you be willing to mentor my son and train him on what you do during the
mhm,
summer? I don't want him messing around, just partying and wasting his time in the
mhm,
summer. I want to be productive. I said, sure, I'd love to do that. I used to teach Sunday school, so
mhm.
I love teaching.
Right.
I think I have a teacher's heart
Mhm,
naturally, and it's very rewarding. So
mhm.
I think I'd enjoy that. So I did that, and then he began to replicate my performance results,
Ah.
and I thought, wow, this is really cool. I got so
Mhm,
excited. I felt so personally like you get a sense of fulfillment, right? You're contributing to another person's life.
mhm,
And so then out of that, other people started to say, wow, would you be willing to teach me?
mhm,
And it just became this thing
mhm,
that I just had grew on me. To
mhm.
this day, 90% of my clients are word of mouth referrals from existing clients. So that should
Ah,
tell you something.
nice.
11
Mhm,
plus years later.
mhm,
So I love this. And so and it's my life's work.
mhm,
And what happened was it led into developing a process in which I get to know people individually and I
mhm,
get to create a community of people that I select and choose that I want to be
mhm.
in theirs.
Right.
And it's a beautiful thing.
Mhm,
But all of this really started with my motivation to free myself and never have to experience what I went through as a child. My
mhm,
dad and mom immigrated to the United States.
mhm,
I was born in Lebanon.
mhm,
And during the Civil War in Lebanon, my dad had done very well, but he'd lost
mhm,
a lot of what
mhm,
he had built up because all of
mhm.
his eggs were in one basket. No one imagined back then. They used to call Lebanon the Switzerland of the Middle East.
Right.
Okay. So he didn't think anything was going to ever
Mhm.
go bad.
Right. It was going to be safe. Mhm,
Exactly. Well, they lost a lot of things and all what they worked for. So they
mhm,
came here and just had enough to kind of start a
mhm.
business. It was a family business. We had to kind of just work together as a family.
Right. Everybody had to chip in. Mhm,
And I remember being 7 years old and having to be there every day,
mm,
pretty much from 9 in the morning
mhm,
till 8 at night.
mhm.
Okay. Um, Now, if I had school, I'd go to school, and after
Right.
school, my mom picked me up and take me
Mhm. You
to
went
work.
right to work. Mhm,
So it, now back then, I didn't realize the value that was providing for
mhm.
me.
Right. It was a very valuable lesson.
Yes,
Mhm.
but it was hell at the
Yeah. As a
time.
kid, you're like, but mom.
I hated. Yeah, I kind of missed
Mhm,
out on my childhood,
mhm,
but I learned a lot of valuable lessons. But
mhm,
when I left, my dad finally sold the business and retired from that.
mhm,
I just needed to find some way to be able to live my life and never be chained
mhm,
geographically to something. I
mhm,
never wanted to feel like I was stuck, never having
mhm,
time, because there was a time period between the age of 10 and 14, I can say, where I really needed my dad. I wanted the a relationship, the
mhm.
friendship, and he just wasn't emotionally or physically
Right.
available
And
for
he
me.
was so busy.
Exactly. He was busy
Mhm,
and he was stressed. And he just never had patience for it.
mhm,
And so it left a very difficult scar in my heart. And
mhm,
it actually led to a lifelong issue where I really my dad and I just never saw eye to eye. We were just at
mhm,
odds with each other. And I left, I think, the house at like 19. I just really hated both my parents. I
mhm,
was very resentful. Now, I look back and I realized there were circumstances.
mhm.
There were whys. I was foolish and full of myself, full of
Right.
pissants,
You
everything they
thought you
say.
knew more than they did.
That's right.
Mhm,
So I think I realized that it was actually no, they knew what was going on, and I
mhm,
didn't. I think
mhm,
around the time I was about 30.
mm,
And so I kind of figured that out finally.
mhm,
But it took a lot. And from that spurred on a journey
mhm,
where I began to learn. I started reading a bunch of books,
mhm,
a lot of things on personal growth, but a lot on business and marketing.
mhm,
How do you create value for yourself? How do you build skill sets so that you're valuable and you're different
mhm,
and unique in the world? So you're not doing something that everyone else can do.
Mm-hmm.
And that's where I started kind of focusing on how to gain specialized knowledge.
Okay.
And I began to, first, it kind of led me down the path of just being very proficient at business development and that whole thing. And I started consulting and I was doing good with that. And that really was what funded all of my frustrating experiences of the roller coaster experience in the financial markets, trying to find something in the market to be consistent with. And so all of that really was kind of building towards how can I make money, but in a way that isn't controlling my life, that it gives me time freedom. Time freedom was critically important for me. And so I got myself to a place where I was doing well enough where my fees and what I charged and how I charged really enabled me to have that time freedom. But then I started, in 1996, the whole trading revolution took off, right? Trade for a living. Anyone who's made any money usually likes to look at the stock market and try to see what they can do and kind of leverage that. And it gets a little bit of addictive, you could say, because it feels great when you make money. When you don't, you feel like, wait a second, I'm smart. I was successful here. I did this. Why can I not crack this nut? Right. A lot of people think it's a personal thing. Like maybe it's my discipline. Maybe it's my management. Maybe it's my trade psychology. All those things are true in the traditional sense. But what we don't realize, and most people don't realize, is that the industry really is structured and set up to work against them. And so, like right on the broker statement, when you have a brokerage account, it tells you that in the risk disclosure that the broker is often going to be taking the position against yours. Well, now wait a second.
Yeah, aren't they supposed to be working for me?
Right? But then the other thing kind of starts to kind of play in the back of my mind. Well, if they're trading against me, that must mean that they know that most people who take a position in the market are making the wrong decision, and they're going to take the opposite position to make money on that. 97% of all traders, people who are involved in the market actively, fail to be successful and make money. They're actually losing money. All right. So that statistic is really alarming. So you think, well, wait a second, if that's the case, well, then where's the hope? So, and this, if you pretty much everyone I've ever talked to in professionals, I have professionals that come to me. Whether you're a professional or non-professional, they all complain about the same exact thing. It's inconsistency.
It goes up, it goes down, it goes up, it goes down.
and they have they have no way of knowing how to control that other than to manage that risk, so that when it gets too much, they cut it off and they say, wait a second, something's changed. I need to look at what's working now. Next new thing, right? All right. So this is the experience I had. So when I went to the capital markets in 1996, I began to invest in my education to learn how to trade for a living, because you could do it with a part-time effort. A lot of people think you have to spend your hours a day staring at the screen. You don't have to do that. You can spend 10 to 15 hours a week, very part-time. A couple hours a day, 2 to 3 hours a day is plenty. You can do it before your work, after work. Now the market's available 24 hours, pretty much, almost 24 hours, 5 days a week. So you're not limited that way. So as I went through that learning curve, it took literally 14 years and over $300,000 just in trading education investment, and I had nothing to show for it. I'd be very diligent, and I'd be very disciplined about what I do. I'm a perfectionist. So it'd work for a little while, and then it would start to work inconsistently, poorly, or not at all.
Right.
And it would, oh, what's going on? Why is this not working? And then there's always some weird, well, the market's changed, or well, here's version 2.0. I'm being
like we said, squirrel.
That's right. And sometimes the person who's selling you says, oh, here we have a version 2.0. There's a constant update or upgrade, and it's more money, and it's like, what other industry is like that? I mean, you don't go to medical school, become a doctor, and then all of a sudden you can't really be a doctor. You have to go back to medical school again.
Right.
You don't go to a pilot school, learn how to become a pilot, and all of a sudden you can't fly airplanes. You got to go back to pilot school, learn how to fly airplanes. You go to school once, and you can build a very successful, very stable, very steady and consistent career for as long as you want to go. So why is that not the experience of the market? So no matter what institution, academy, educator, training, nothing gave me something sustainable and consistent. It turns out they all complain about the same thing themselves. The very educators are the victims of the very inconsistency. And even the professionals, deal with inconsistency. So
Mm-hmm.
after 14 years, I'd hit a kind of a rock bottom moment, and emotionally, spiritually,
Mm-hmm.
I had in my business, I had a partner that embezzled money and blew us up.
Mm-hmm.
That was very painful. And my brother said to me, you know, why don't you find a way to just be consistent and not have to do, care about whether you have a partner or not, don't have a partner, don't worry about other people. Just you have full control over that. I
Mm-hmm.
said, it's great. Just one problem. I've been trying to be consistent for 14 years and it just, there's something's wrong.
Mm-hmm.
It just doesn't, it's not clicking. And he's like, well, you're the guy who has faith in God. You trust God and,
Mm-hmm.
nothing's impossible with him. Why don't you pray about it?
Mm-hmm.
And that thought had never occurred to me.
Right. Mm-hmm.
I was
Because
very,
you're like, God, finance, no. Mm.
exactly.
Mm-hmm.
But it turns out, I learned a principle in life, which is, and it really, it's amazing. It just works out. There's a spiritual principle. God makes his plan. Excuse me, we make our
Man
plan,
plans,
and
God
yeah,
laughs.
that's right. And
Mm-hmm.
God laughs, right?
Mm-hmm.
And but God can direct our steps.
Mm-hmm.
So man makes his plan, God directs his steps. So
Mm-hmm.
I thought, well, wait a second. I'm self-willed. I'm directing my own steps. So I had kind of a little bit of a come to Jesus moment. I had a
Mm-hmm.
little crisis moment, and I literally just surrendered. I said, you know what?
Mm-hmm.
I'm going to give this to you. I don't even know what
Mm-hmm.
to do. I'm frustrated.
Mm-hmm.
I'm broken. I don't get it. Everything's blown up.
Mm-hmm.
This is the only thing that seems to be available that would actually give me any real control, but I
Mm-hmm.
haven't figured out how to make it consistent. Um, I don't think it's me because I've done everything diligently the way
Mm-hmm.
I'm supposed to be doing it,
Mm-hmm.
and it's clear that systems are failing. So what do I do?
Mm-hmm.
And you know what? I don't want. I'm tired of even trying to succeed for my sake,
Mm-hmm.
but I'm just a humiliating mess. Do what you want with me and let it be for your glory. Let it
Mm-hmm.
be for your, let it point the
Right.
finger back
Mm-hmm.
at you. So now I got to tell you something. If you're my mother,
Mm-hmm.
you'd be very concerned about me when I finished school because I struggled through school.
Mm-hmm.
I was so, I was such a, I was so not inclined
Mm-hmm.
academically that I had to take weekly progress report cards home.
Ooh.
Weekly.
Ooh.
Okay. I had to go to summer school multiple
Mm-hmm.
times. I failed math
Mm-hmm.
twice, not
Mm-hmm.
once in high school. And on my senior year of high school, my
Mm-hmm.
last year, my economics teacher of all
Mm-hmm.
subjects, Mr. Khoury, 2 to 3 weeks before graduation, he's telling everyone, he's giving us all the grades, everyone the grades, and he leaves me out of the whole role, right? Until the
Uh-oh.
very end.
Mm-hmm.
Next thing he says, Corey,
Come see me.
come see me at 7:45 in the morning on the day of graduation.
Mm-hmm.
Why? Why?
Mm-hmm. The day of
The day
graduation.
of,
Mm-hmm.
yeah, literally the morning.
Mm-hmm.
That graduation ceremony starts at 9. He
Mm-hmm.
wants to see me at 7:45.
Mm-hmm.
I said, but why? He says,
Mm-hmm.
because I don't know if I'm going to let you graduate this year or not.
Yikes.
I'm just getting chills telling you, just reminding
Mm-hmm.
myself the story. I said, you're not. I have to prepare. I mean, I need to. He's like,
Yeah.
that's not.
What do I tell mom and dad?
Oh, do you know the mental hell that was that
Oh,
put
yeah.
me in?
I could just
Okay.
see you, calling and saying, no need to get in the cab.
I was so freaked out. And he literally he didn't care. I said, how am I gonna? I need to prepare. He's like, that's not my problem. You go figure that out.
Mm-hmm.
I said, can you? I mean, are you leaning this way or that? He says, don't keep nagging me,
Mm-hmm.
or I'll make my decision right now, and
Right. And it won't be what you want.
and it won't be what you want. And we'll deal with this for another year next year. I shut my mouth and I just went and I said, you know what? I'm going to pretend I'm graduating. I'm going to get
Mm-hmm.
everything ready.
Mm-hmm.
And if he says to me, you're not going to graduate, I'll figure out how to deal with it then.
Mm-hmm.
It
All
was
of a
too
sudden, you've got
overwhelming.
stomach flu, right?
Oh my God. It was too overwhelming. I couldn't handle it.
Mm-hmm.
Luckily, that morning I walked in
Mm-hmm.
and he had his head down working on the desk and he was
Mm-hmm.
writing something. And he looks up and he sees me and he goes, takes a piece of paper and says, here, Corey, get out of my face. I don't want to see you for another year.
Mm-hmm.
So D minus, just a hair above fail, just so he wouldn't have to
Oh,
deal with me.
oh.
Okay.
Mm-hmm.
So he let me graduate.
Mm-hmm.
So Now, you think about then
Hmm.
and now.
Right.
I'm not the guy that you would think could develop
Right.
and
And
innovate.
you're clearly intelligent. So something was just not a good match there.
I'm telling you, there was something that was working through me,
Hmm.
which the only explanation is God's grace, God's mercy. And I find like whenever we kind of realize how dependent we are
Hmm.
on, because if you think about all success, people who work harder than you, they're smarter than you, and yet they don't succeed. They struggle. And you wonder like why they seem so deserving. Why am I successful and that person isn't, right? Then you've got people that are lazy, right? And they're always walking a dumb luck and they're doing great in life. So it's like we've got these two extremes. So there's
Hmm.
of like medical school or but I mean entrepreneurial stuff, right?
Hmm.
The thing that's important to figure out is there are always factors that are outside of your control
Hmm.
that are required to show up so that your preparedness, when opportunity crosses
Hmm.
path with you being prepared, success can occur.
Hmm.
But if you're always prepared but opportunity doesn't show up,
Hmm.
success doesn't happen. If
Right.
opportunities are always showing up but you're not prepared, success
Hmm.
doesn't happen.
Right. It
So
has
what
to
is it
be
that
that
it
match.
has to be
Hmm.
that thing? So I realized there's something outside of me that's going to bring this together.
Hmm.
So that was when I had that moment, and it was that was the turning point, and that led me eventually to a situation in which I thought I had something yet again,
Hmm.
and then yet again it broke my heart. It disappointed me, and I almost punched my computer monitor,
Hmm.
and I held myself back, and I was just boiling over, and I went and I said, you know what? I'm gonna just get out of here. I'm gonna go to the beach to just kind
Hmm.
of calm down. So I go to the beach to calm down, sit on a bench, and I'm watching these 17 surfers.
Hmm.
And I know I'm boiling over. So I mean, it's not, I don't have a habit of sitting there counting people in the ocean,
Right. Yeah.
but
17 is kind of a very specific number.
right. I'm counting them because I think I'm trying to distract myself just from my thoughts that are just boiling over. And I'm
Hmm.
counting them and I'm seeing 17 surfers, but there's two off to the left. And they don't seem to be very active, like the 15 who kept taking wave after wave,
Hmm.
you know? But they would like take waves after wave and they would crash and burn on some. They would have some good rides on others. And these other two that were kind of just sitting there didn't seem to take very many waves at all. And I thought, oh, those are probably amateurs learning from these regulars that are here all the time. After about an hour and a half, I realized every time those two that are off to the side took a wave,
Hmm.
they had a very nice, smooth ride that went almost all the way into the shore.
Ah.
And it hit me. And I said, wait a second, those are the pros,
Hmm.
and the 15 are the amateurs.
Right.
And the pros had a way to,
Trying everything they could.
right? And
Hmm.
and they were, and so they had a way to filter out what waves were not likely to give them a bad ride.
Hmm.
Now that was an epiphany because that was the pivot point that changed everything for me because it changed my perspective.
Hmm.
I realized the 15 were looking for opportunities to ride a wave, a good
Hmm.
wave, right? To surf a good wave.
Hmm.
But the two off to the side were looking for opportunities that were not likely to give them a bad ride.
Hmm.
That same concept suddenly clicked in my mind. I thought,
Hmm.
wait a second, I'm going to the markets looking for opportunities to make money. But
Hmm.
really, what I should be doing is I need to be looking for opportunities that are not likely to lose money.
Right. Hmm.
And that changes everything.
Hmm. Even if you're
That
just staying the same, that's good.
it, yes and no.
I mean, you want to obviously be going up, but you don't want to
Yeah.
be going down.
You don't want to
Hmm.
be going down.
Hmm.
What people don't realize is a lot of times they buy and hold,
Hmm.
they might go up
Hmm.
and then they give money back
Hmm.
and maybe they're break even when they want to
Right.
pull out 20
Hmm.
years later. They go, wow, I've just, I've lost 30%, 50% of my
Hmm.
portfolio. Took however many years to get there. We
Hmm.
had a crash. We had a like
We
the
had a
Nikkei,
pandemic.
or we had a pandemic, right? What if, we had a market that did what the Nikkei did? The
Hmm.
Nikkei hit an all-time high, went
Hmm.
down and didn't recover,
Hmm.
right? So what if we don't recover? What happens when
Hmm.
someone wants to pull out? Suddenly they're looking at something and goes, oh, geez, well, I don't have a great retirement, but thank God I didn't lose my main principal capital that I started with, right? No, you did lose your principal capital because inflation has eaten away at your principal capital.
Hmm.
So what $100,000 meant 10 years ago doesn't
Right.
buy the same stuff at 100, today with 100,000. So we are losing when we're staying safe. So we do want to be ahead of inflation,
Right.
but we want to be ahead of inflation in a way that's controlled, that's not stressful, that's consistent, so that you can compound reliably, right? This is what I call making peaceful profits. Okay. Because a lot of people who are involved in the markets are stressed, right? They're wrestling with the markets, and it doesn't have to be that way. What this journey led me to was developing and kind of literally inventing a whole new way of looking at the markets and how to analyze it. I thought for a while that if I had all of the fundamental analysis and technical analysis working together, that I basically could be consistent because I had everything I needed. I found out through a series of serendipitous events that there was 8 major factors that affect supply and demand, right? And if you think about the fact that everything that let's step back for a second. What causes price in any market, whether it's real estate or financial markets, but obviously specifically in the financial markets, what causes price to go up? When there's more demand.
Demand.
What causes price to go down? When demand shrinks or
Right.
contracts.
Less demand.
Right? Okay. And that obviously affects supply and all that stuff. That's fine. But at the end of the day, it's demand that is the leading indicator to where price is going to go. We're always focused on the price of things. Professionals, especially, are focused on the price of things. Fundamental analysis is inherently focused on the price of things, value, right? Technical analysis, the price of things. Well, there's geopolitical forces, there's volatility, there's market sentiment, there's liquidity levels, there's volume, there's order flow, there's trade flow, there's things I call prime liquidity pools. It's the elasticity of an area where the market can be manipulated, and insiders like market makers and brokers can see that and know where they can manipulate a market, and that causes people to feel very frustrated when they feel like a market came and hit them and stopped them out of a market. It felt very personal. It's because they're not aware that they're inside of a prime liquidity pool. So if you know that that's there, wouldn't you want to take that into account so you're not a victim by that? You're not victimized by that. You have the imbalances in supply and demand themselves. So there's outside of technical analysis and fundamental analysis, there's 6 other factors that have to be taken into account that blindside people. When I realized those are all the demand factors that if I can combine them and see what their combined impact on price is going to be, that's going to give me a very accurate way to analyze any opportunity, no matter how it comes to me. Whether you tell me a rumor, hey, Roger, I heard Tesla's doing this, I've got a friend of Tesla, you should buy Tesla. Well, guess what? A lot of times people say, oh, I heard this, and they go buy it, and then nothing happens. The thing actually goes opposite.
Right.
Well, you know that we no longer have to be victims of that uncertainty when you actually apply demand analysis. And that's what I developed is something called market vulnerability analysis, which shows me all the vulnerabilities by understanding where the real-time demand is in the market at any moment. Once I know where demand is in real time, I can see where price is at versus where demand is at.
Right.
And to help you to give you a visual, think about you have a goal of taking a road trip that's 250 miles long. Okay. You get in the car. You already know the goal is 250 miles out. But I'm sitting in my car and I see that I have a quarter of a tank of gas left. Instantly, I know there's a gap. There's an imbalance between where my target is and what I have, where I can go. I don't have to go drive my car stressed and frustrated, uncertain about when the car is going to peer out and stop and stall when it runs out of gas. I don't have to do that. I know that I can stop, refuel, get a full tank of gas, and that'll take me 250 miles down to my road trip. I'll get my destination safely without stress, right? I have control over that. That is an objective piece of data. There's nothing subjective about that. It's not subject to your interpretation versus mine. We both know quarter tank of gas won't give you 250 miles.
Right. Yeah, right? You've got that information there already.
Exactly. And that's how I developed and designed my analysis. So you could see visual indication of on the bottom, you'll see demand, where it's been the whole time as price goes up and down. And so for instance, when you see, I don't look at Tesla very often, but I had a reason to look at it, I don't know, a couple of months ago. but it was like up at 1,000 plus. You look below where I've combined all the demand factors, and you can see that as price went up, demand went up with it, and price kind of retraced, pulled back a little bit, and came back up to retest the previous high when it made that high. Well, when it came back up, the demand on the bottom reflected that it was back to where it was when it was in the 700s. So it's a visual indicator. It's like your fuel gauge in your car, right? So it goes up, it goes down. So the fuel, right, what's going to power the market, power the price up or down, was showing that it was at the same level as it was the last time it was when it was at 700. So that tells me visually, price is at an unsustainable high at $1,000. Price is going to be correct.
There's a $300 difference,
right? That's a 30% drop. Well, guess what happens? Demand always moves first, and there's always a lag. Price then follows after. That little lag is what creates that imbalance that we can arbitrage or take advantage of that difference to pocket the difference, whether it's short or long. So whether the market goes up or down, we don't care. And so now here's what happens. When I see that, I know that within a very short period of time, in a very timely way, not at some point Tesla's going to crash. No, we know in a very timely way that in the next day or two or three, we're going to see Tesla coming back down to 700, a 30% correction. So if I'm in Tesla, I can take an exit without second guessing myself and being stressed. I know objectively it's going to correct 30%. And sure enough, it corrected 30%. And since I started doing this, I like to do things live in real time because you can't fake or cheat that, because people can look at their own monitor and go, oh yeah, I mean, that's he's not making that up. That's
you
not
turn on CNN and you can see, oh yeah, that's exactly what.
Yeah, it's not pre-recorded. They see it. It's right there. Well, I forecasted live in front of a worldwide audience all the major crashes. Okay, since I developed this back in 2010. So we had the 2015, we had the 2018, we had the coronavirus, you know, and these things are there. People can go and validate that. And so what's important is to recognize I no longer have to be a victim of sudden or surprising moves or crashes in the market. Why? Because demand moves first, price moves later. Now, here's a great example, because people say, well, wait a second, you can't predict when a terrorist attack happens. So how are you gonna be able to forecast that? We're not forecasting an event that triggers a move. Okay, we're forecasting where price is going to go based on what demand is telling us. So remember when Chipotle Mexican Grill had an E. coli breakout in their restaurants?
And their stock went kaput.
Exactly. Now you might say to me, Roger, how can this help you in a situation like that? I understand on a day-to-day basis, you know, where you can get in and you can do that. And that sounds great. But how do you protect yourself against these unforeseen things? Well, here's what's interesting. Like a storm, it doesn't just show up and pop up over your head. You'll see, right? There's environmental factors that have to occur and combine in order for clouds to form. And then that's not enough. These environmental factors have to continue to evolve to cause those clouds to produce rain or produce a storm, right? So these are things that you can identify, and they take time to build, which makes them forecastable. No market suddenly corrects or crashes without an environment that is conducive for such an event. So if you had a market that was not conducive for a crash and you had a terrorist attack, what you would see is a single-digit decline that begins to accelerate throughout the day as more and more people catch on. That gives you plenty of time to not have a bad experience where you had double-digit losses. You can actually take defensive action. But when a market is actually environmentally situated where it's vulnerable to a significant crash, and that trigger happens, then you'll see a double-digit very quick decline.
You get that steep decline very quickly.
Right. So now here's what's the saving grace. In both instances, you're going to see that where the environmental factors are that are the demand factors that can affect price. So in the Chipotle Mexican Grill, for instance, you saw 8 weeks prior, the demand had shifted. I think it was like at least $200 to $300 below its high. and it sat at its highs and hovered and just kind of went up and down around
Right.
the highs
Mm-hmm.
for several weeks.
Mm-hmm.
And then when the E. coli breakout happened,
Mm-hmm.
well, the environment was already conducive, it was vulnerable, and then it plummeted and crashed very quickly, right?
Right.
So in other words, if you had this analysis and you applied it on Chipotle Mexican, you would
Mm-hmm.
know to lighten your load or get off and exit
Mm-hmm.
because you have something that's not sustainable in terms of where price is
Mm-hmm.
at. Does that make
Right.
sense?
Yeah. And it's the not sustainable part that I think is what people aren't understanding, because yeah, they see, oh, this looks great. And it, at a certain point in time, it
Right.
probably is.
Right.
But yeah, nothing is sustainable. Nothing. I don't care what it is.
Correct.
And there's only so far that things can go up. I mean, so they have to correct and come back down. And I mean, we did have the perfect storm 2 years ago with COVID,
Yeah.
with the war, in with Russia, with supply chain demand. I mean, all of those things. But so it's like you said, so many of the things that dropped a lot were overly inflated to start with. And so the tiniest little tweak went kaboom. And so that's where people just have to look. It's like, no, wait a minute. It's almost that it's too good to be true rule. This looks really good. And that's where people invest. Well, they shouldn't have,
That's
unless
right.
they're going, okay, well, I can get out really pretty quickly too. But because we've all heard the adage, buy low, sell high.
Correct.
But yeah, it's not. But yeah, I think that's where so many people do get stung, is they're thinking, oh my gosh, this is fabulous. It's doing very well.
Yes.
And so that's when they jump in, and they're not stopping to think, okay, this really can't continue to go up.
Right.
And so then that's where I'm assuming then you start combining things where
Well,
some is going up and some is going down. You kind of want this average type of doing well.
so interestingly, what the analysis does is allows you to take any opportunity on whatever, whether you're an intraday focused person where you want to get in and out, and day trade, or you
Mm-hmm.
want to swing trade or position trade, or
Mm-hmm.
invest for longer. You apply this analysis, it acts like a risk filter. What it tells you, imagine kind of this rubber band,
Mm-hmm.
okay? What it shows you at any moment is, if you think something's good,
Mm-hmm.
where people fall short is they don't know before they commit capital to an
Mm-hmm.
investment whether it's going to succeed or
Mm-hmm.
fail.
Right.
Okay. They just have done their analysis, and for
Mm-hmm.
whatever they have that they're equipped with at the
Mm-hmm.
moment, they see it as a good opportunity. Okay. But they don't know before they get in whether it's going to
Mm-hmm.
actually work out or not. Okay.
Mm-hmm.
So that uncertainty, not knowing, is where my analysis fills that gap, so that
Mm-hmm.
you can know with at least an 80 to 90% level
Mm-hmm.
of accuracy that the opportunity that you've assessed looks good to you and that you're
Mm-hmm.
interested in investing in. Guess what? Before you put money behind it, you can actually apply the analysis and
Mm-hmm.
see, is demand at a place that's actually going to cause price
Mm-hmm.
to move and hit your target, or
Mm-hmm.
is demand not going to give you what you're looking for?
Right.
So you'll know whether you succeed or fail
Mm-hmm.
before you commit any money to it.
Right.
Okay. So you don't have to guess anymore. You can
Mm-hmm.
actually, and so this rubber band here, you could see, like, when it's stretched out, it presents an opportunity for it to snap back, right?
Mm-hmm.
But that's just an opportunity for it to snap back, but it has an opportunity to continue stretching even further away.
Right.
Well,
Or it can go too far.
and go too far.
Mm-hmm.
So it's important to know whether it's poised to continue stretching and going further away,
Mm-hmm.
or it's no longer able to continue to go further away from
Mm-hmm.
demand. It has to catch back up to where demand is,
Right.
because price is always fluctuating, right?
Mm-hmm.
It's always chasing demand, right?
Mm-hmm.
So as demand goes out, it's going to follow, right?
Mm-hmm.
And sometimes it overshoots and comes back. And so this is the kind of relationship we have. But we want to be able to analyze very accurately with at least an 80 to 90% accuracy when not only there's an imbalance in the market that
Mm-hmm.
can snap back, no, but when there's a significant imbalance where statistically there's not much room for the price to continue further away from demand. It has
Mm-hmm.
to come back now to catch
Right.
up. And that creates a very
Mm-hmm.
low risk, high probability opportunity
Mm-hmm.
to arbitrage or take advantage of the difference for
Mm-hmm.
profit. This is what creates a very consistent, steady, low to no stress experience to outpace and outperform the market,
Mm-hmm.
which outpaces inflation very easily without the stress and a very part-time
Mm-hmm.
effort. And that's
Right.
what demand imbalance arbitrage is. So
Mm-hmm.
demand imbalance arbitrage is arbitraging between where price is versus where
Mhm.
the actual demand really is
Mhm.
when there's a significant imbalance.
Mhm.
So we're looking for, you might see, 10 opportunities,
Mhm.
but 80% of them actually are not situated with a high probability,
Right.
low
Mhm.
stress
Mhm.
environment. It's going to challenge you
Mhm.
and likely to fail. So we want to get the 10 or 20% that actually
Mhm.
are going to work out in our favor without stressing us out. So
Right.
out of like a 10-hour commitment of giving yourself a part-time effort to just look at where opportunities
Mhm.
are at, you might be active only 10 or 20% of the time. The rest of the time you're
Mhm.
saying, yeah, I see opportunity here, but it doesn't
Mhm.
look good. It's
Mhm.
I'm
Yeah.
seeing a
I'm gonna
stormy
hold. I'm
condition.
good. Mhm.
Exactly. Just stay out. Why stress
Mhm.
myself out? It's like I can forecast when a storm is coming,
Mhm.
but I should also have enough wisdom to know I shouldn't go run errands in the middle of a storm.
Mhm.
Let the storm pass, right?
Right.
Those are moments of higher risk, higher
Mhm.
stress, more
Yeah,
pressure.
like all the people who cashed out when COVID hit.
Yes.
No, that was the worst possible time. Now, granted, there were people who absolutely needed that money.
Yeah.
But if you didn't need that money, you really did need to just hold on. Now, there might have been some things you needed to switch around, but it shouldn't have been this mass exodus, which a lot
Okay.
of people
So
did.
with the analysis, you wouldn't have had to sit through that 30%
Right.
drop.
Mm-hmm.
So when you have this analysis, you look at, I
Mm-hmm.
had a client, for instance, I'll give you his example. He was looking at the market actively and he saw that when the market made a new high
Mm-hmm.
and then pulled back during the coronavirus, it
Mm-hmm.
was at an all-time high and it pulled back just a little bit. He saw
Mm-hmm.
that when it pulled back,
Mm-hmm.
demand didn't just come down, it crashed.
Uh-oh.
So he knew,
Mm-hmm.
because of my analysis,
Mm-hmm.
in real time,
Mm-hmm.
demand was going to trigger a coming double-digit correction.
Mm-hmm. Right. So
So he
get out of that one.
Exactly. So he
Mm-hmm.
called his money manager for his retirement, his 401k, and he says,
Mm-hmm.
please move my money into all,
Mm-hmm.
just go into all cash. I don't want to be in
Mm-hmm.
the markets.
Right. Yeah. Let's not worry about it at all for a little bit.
Right.
Mm-hmm.
So, and then on his brokerage account, he took a
Mm-hmm.
short.
Mm.
So
Mm-hmm.
on his little, brokerage account, he made 35% in 2 days.
Mm-hmm.
He avoided a 30% crash on his
Mm-hmm.
retirement account. And then when it bottom began to recover, he
Mm-hmm.
got back in and
Right.
rode it back up
Mm-hmm.
as a gain rather
Mm-hmm.
than filling a financial hole that he would have
Mm-hmm.
had if he just left it in. See,
Right.
like, why would you stay in a market
Mm-hmm.
and then just wait for it to come back and recover? You're losing time. You're paralyzed. You have paralyzed capital. It's
Right.
not being productive.
Mm-hmm.
And guess what? Let's say you have a 50% crash.
Mm-hmm.
I want you to think about that for a second. If it recovers 100%,
Mm-hmm.
what have you recovered?
You just got back to your starting point.
Actually, it's the
It's
market would
lower
have.
because right, it during that time period, it could have been earning more.
Yeah. So here's what happens. If you lose 50% of your portfolio,
Mm-hmm.
the market can't just recover for you to recover. The market
Mm-hmm.
would have to double for
Right.
you to get back to break
To make
even.
up. Yep. Mm-hmm.
So why would we do that to ourselves? This is what we're taught. Oh, stay in, don't cash out. Double down, put more. Well, what if it doesn't recover? What if we happen to hit a cycle that doesn't
Mm-hmm.
recover, right? Like the Nikkei. That's a
Mm-hmm.
great example. Well, so with this, we can
Mm-hmm.
protect ourselves against the downside. We can significantly reduce our downside risk exposure
Mm-hmm.
without limiting our upside potential because
Mm-hmm.
we're doing real-time demand analysis. Does that make
Right.
sense? So
Mm-hmm.
that's the difference with this. It really is empowers people,
Mm-hmm.
gives them more control,
Mm-hmm.
gives them objective clarity,
Mm-hmm.
it gives them consistency, which gives them confidence. That's the
Mm-hmm.
four vital C's I talk about.
Right. And the important thing for people is with anything that we talk about, you have to have goals. You have to know, okay, so maybe if it's a financial goal, you're thinking, okay, I need X number of dollars to retire
Yes.
or to take vacation or whatever. And you have to have that goal. I mean, it's like sales. I have to know I want to sell X number of products. Because if we don't have those goals, we don't know when we get there. And it's kind of back to your 250-mile thing. That's great, but if you don't know which way you were going, it's not going to make any difference at all.
Correct.
You have to tell that GPS or your map or wherever, I'm going to X.
Here's
Now
my
you can
destination.
adjust along the way, you can do all sorts of things, but you can't just go off willy-nilly. I mean, you could, but you have to have sat down and really thought about this. So, are your goals long-term goals? I'm going to retire in 20 years. Here's what I need. Or I want a way cool vacation next year. Here's what I need. Because you are going to make different decisions based on what those goals are.
Correct. Or I get a lot of guys who are executives or business owners who just want to get out or doctors who want to get out of the grind, right?
Right.
And so they have a healthy portfolio that they want to be able to use and invest wisely. And so depending on the amount that they have, because of the consistency that allows them to compound and outperform the markets, they have a very realistic potential to actually replace their full-time income, cash flowing the market over a 2 to 4 or 5 year period, depending on what they start with, because of the consistency. And they can actually switch out of whatever they're doing, start to actually live life a little bit rather than being chained to the office all day long, right? And that's a critical aspect. So consistency is key, because without consistency, we have nothing, right? But we have to have that controlled outcome. We want to control our experience so we're not stressed along the way. Because if we're stressed and making money, that's not sustainable either. We're going to make mistakes because of that pressure, right?
Right.
Stress and pressure makes us do weird things. We want to avoid that. We want to control that. We want to control our outcomes so that we know that if I'm applying this, I know that I'm going to have a very stable, realistic, consistent outcome that I can depend on, I can bank on.
Right. And you used a word earlier that's very important too, and that's conservative. And that all depends on the person. I mean, some people are totally risk adverse. Some people like some. I mean, years ago when I got married, I had invested in tech. So I had IBM, I had, all these various, because they were making lots of money. I mean, this is 30 years ago. This is when that stuff was going crazy.
Yeah.
My husband, that's his business, looked at that and went, no. He said, that's nice, but, and I was like, oh, okay. I mean, I just thought, oh, hey, it was making lots of money. And he said, now, but it can't continue going up like we were saying. So we kept some there because, okay, that was, but yeah, it was like, let's move stuff. But it is, I think, and there's lots of other factors. I mean, there are people who, and I know some people who think that crypto is the greatest thing in the world. I wouldn't touch it with a 10-foot pole. Yeah. Now I'm also a lot older than they are. So, that's part of the difference too. We were laughing before the program, invest in gold. Yeah. But yeah, there's so many things that need to be taken into account when you're developing your portfolios. I mean, are you the head of household? All these various things. But what I love is, a big part of it is teaching the youngsters. I want to go back to that, teaching that high school kid, because if we learned all of this stuff when we were that age, holy kashmoli, we'd be on those big lists, right?
Oh yeah. Yeah, if I only knew then what I know now. Exactly. Absolutely. I think there is something to say about having the ability to, whether you're risk averse or you're not, having a process that's consistent,
right?
That allows you to make good decisions that are going to be right, where up front that it's proven to give me right decisions, because the analysis is always going to produce an 80 to 90% correct outcome, right? That's a level of peace of mind and control that people have. And so if someone's, let's say, super conservative, well, the process is conservative on its own, right? It's giving you stability. It's reducing the volatility of your account and your experience. It's also enabling you to have a level of control and risk reduction without giving up the outcome that you hope to have. So for instance, there are people who are risk averse, right? But they wish they could make more, and they've been taught that the risk reward paradigm is, well, if you want to get greater returns, you have to assume greater risk.
Right. And they don't like that. So then they just hold.
So, well, with this, when you have that kind of control through analysis accuracy, you no longer are dealing with the uncertainties, the unknowns, which, by the way, the unknown, being uncertain is what drives greed and fear, which are destructive forces.
Right.
But if I have knowledge of something, I know with total objectivity, there's nothing to be afraid of. There's nothing, you wouldn't be afraid that your car's not going to run out of gas when you have a full tank of gas.
Right. You're watching that needle.
So that objectivity is what I offer clients who come and learn this analysis process, which is a skill set, and it's not a fad. We've been doing this for 11 years now. Since 2010, I developed it for myself. In 2011, I began teaching it formally to people. I've never once updated it. I've never tweaked it. I've never fixed it. I've never
Wow.
modified it. It's the same. It works. Why? Because it's
Mm-hmm.
built on principles that are
Mm-hmm.
unchanging.
Mm-hmm.
Demand is always going to be there, just like
Right.
gravity, right?
Mm-hmm.
It doesn't change.
Mm-hmm.
So we can actually work with that. There's never a version 2.0.
Mm-hmm.
There's never a next new thing. We no longer have to worry about what the market's doing next because we're outside of that. We're measuring, just like the weather. The meteorologists aren't going back to school and inventing new
Right.
instruments.
The clouds are the clouds are the clouds. Mm-hmm.
So they learn how to do weather forecasts based on
Mm-hmm.
all these instruments that are set, and it
Mm-hmm.
gives them all the information they need. And no matter
Mm-hmm.
where they go in the world, what weather patterns evolve,
Mm-hmm.
they can forecast that
Mm-hmm.
the same, right?
Right.
A barometer is going to work the same
Mm-hmm.
on Mount Everest as it does
Mm-hmm.
in Death Valley as it
Mm-hmm.
will in the North Pole. And it doesn't matter where you put it.
Mm-hmm.
And so those things are objective data
Mm-hmm.
points that don't change. And
Mm-hmm.
so that's what my process was built
Mm-hmm.
upon, which is what gives the consistency. And I
Right.
think when people look into that, they realize, wait a second, I have a way to know before I get into
Mm-hmm.
an investment position whether it's going to succeed or fail and be
Mm-hmm.
right 80% to 90%
Mm-hmm.
of the time. Yeah. You mean I don't have to take greater risk to make greater returns?
Mm-hmm.
No, not with this, not anymore.
Mm-hmm.
Now you can actually
Mm-hmm.
flip the risk reward paradigm on its head. You can actually
Mm-hmm.
reduce dramatically your risk
Mm-hmm.
while increasing your return
Mm-hmm.
potential because of that control that it gives you.
Right.
It's all about being
Right.
accurate, being
Mm-hmm.
objective with your
Mm-hmm.
analysis.
Right. And there is the disclaimer, nothing is 100%, folks.
Yeah, exactly
If
right.
it was, wouldn't that be fabulous? Like I said, then we'd be on those lists again, right? But things still happen. And so but 80 to 90%, that's something people can live with.
Yeah.
In
And that's
the
been
end.
over a
Mhm.
decade now, consistently. Like it's impossible for you to. It's like flying an aircraft, right? It's a process. It very few, like
Right.
if you apply
Plane
that
goes
process,
up, plane levels, plane comes
yeah.
down.
And there's a process on how to navigate through
Mhm.
weather, right? And there's certain weather we know they've studied that you should keep the plane grounded, right? So if you follow those rules, you're gonna have a very long,
Mhm.
successful, stable career in the airline industry, right?
Mhm.
So this is the same thing. It works the same
Mhm.
way. Because if you want to have anything that's solid, that's consistent, you can bank
Mhm.
on, it has to really produce the
Mhm.
same way that any other
Mhm.
career produces, right?
Right.
Are there medical errors? Are
Mhm.
there pilot errors?
Yeah.
Do we have things that happen?
Mhm.
Yes, but those are that's the small fraction of the
Mhm.
time, right? So, but if we didn't have that consistency and
Mhm.
stability in those careers, we would not have those
Mhm.
careers as successful as they
Right.
are, right?
Right.
So this is
And
the
we
same
hear
thing.
about the things that go wrong. I mean,
Yeah,
that's just, the
exactly.
way things are. Mhm.
And that's what this needs to be. And so that's what this is, right?
Mhm.
So people have to think about that. They want to not just focus on money, making money. It's more
Mhm.
important to have a process that shields you or guards you against giving that money back when you have any gains,
Mhm.
right? So
Right. Yeah,
that's the key.
and it is all about knowledge and education. I mean, this isn't just crystal ball type of things and
Correct.
ooh, this one sounds good today because I like that color. I mean, I know
Right.
people who literally invested in IBM because they like blue.
Yeah.
And
Yes,
you're
I know
like,
those folks too.
or chose not to invest in things because of certain reasons. My very Catholic mother-in-law had certain things that she would not invest in because the Catholic Church said no, no, no.
Interesting.
Okay, she's gonna follow, or she was gonna follow that no matter what. But yeah, it is about being educated and knowing what's going on. It is something that's gonna take time, folks. This isn't, ooh, I'm gonna do this today and tomorrow I will be rich. So Roger, tell us more about what it is that you provide.
So this is actually a skill set,
Mhm.
and it's acquiring specialized knowledge. And that when you have specialized knowledge, you have there's intrinsic value there, right?
Mhm.
There's a value that is not easily replicatable, right? And
Mhm.
so when you have that sort of thing that gives you control,
Mhm.
it's what I provide people. I like to teach people how to fish for themselves so they can feed themselves for the rest of their lives. I don't want
Right.
them dependent on someone else because no one's going to
Mhm.
care more about them or the situation
Mhm.
like they do. So what I offer is an opportunity where they can be mentored personally by me and my
Mhm.
partner, Bo Yoder, who we both work together to really foster and nurture a community of clients and help them to give them a very step-by-step, personalized approach to how to accomplish their goals,
Mhm.
their lifestyle goals, which starts with their investing
Mhm.
goals, right? And so we work that out together and we help them give them a plan. But
Mhm.
that's just kind of the general. How do we execute and accomplish that?
Mhm.
Is through the mentoring and the training program
Mhm.
that we have that teaches them the skill
Mhm.
of how to analyze the markets with 80 to 90%
Mhm.
accuracy in their
Mhm.
analysis. So what we do is, rather than try to sell anyone anything, we're not interested in selling them. We
Mhm.
like to do the two things that we were taught in kindergarten. We
Mhm.
share and we're kind, right?
Mhm.
So if they want to go to marketforecastingacademy.com,
Mhm.
what they get to do is they get to access a complimentary mini course primer on demand imbalance arbitrage.
Mm.
And so, you can get through it. If you want to binge watch it in like 3 hours or whatever, you can probably do that, but you can
Mhm.
take your time over 3 or 4 or 5 days.
Mhm.
But it's a course, it's a little mini course. You learn
Mhm.
everything there is to know about demand imbalance arbitrage.
Mhm.
It answers 99% of all the questions we've ever been asked in the last
Mhm.
10 years. At the end of that, there's a set of requirements. If they meet the requirements, we know kind of who this is really ideally
Mhm.
suited for and who
Right.
it's not.
Mhm.
And they want to apply, they can fill out a short
Mhm.
application and then submit to book an evaluation with me,
Mhm.
where I'll spend some time getting to know them, getting to know
Mhm.
their personal situation, and I'll see if
Right.
it's a
Is
good
this going to
fit.
work for everybody?
Exactly. Because
Mhm.
anybody can do this, but it's not for everybody, right?
Mhm.
It really, I've found there's personalities, there's circumstances in their lives
Right.
that are not conducive. It's
Mhm.
just, so I don't care when someone says, listen, I got to have this. I'll pay you whatever you want. No,
No,
that
that's the red flag. Red
that's the
flag.
red flag. That's why I can't take you right there, just for that reason alone, right?
Mhm.
So we do turn down people. This is not a situation where it's just about, building our business. We
Mhm.
never put profits before people. We put people before
Mhm.
profits. Okay. So what we do then is, after the evaluation, let me take that back. Excuse me. So this is all part of the edit. All right, here
Mhm.
we go. That helps. You can see the audio thing right there. Okay, there's the audio clip that we have.
Mhm.
All right. Now, during the evaluation, I'm looking to make sure that not only is it a good fit, but there's not a personality conflict,
Mhm.
and that I'm confident that I can guarantee their success,
Mhm.
right? So it's a little bit like applying to go to medical school, or how they kind
Right.
of look at applications, they
Mhm.
see whether someone's a good fit for their school,
Mhm.
and they're looking for certain criteria. Why? Because they want to stamp out successful
Mhm.
people, right?
Right. They don't want to waste their time if it's not going to work.
Yeah.
And they don't want you to waste your time either.
Exactly, because
Mhm.
their name and reputation is on the
Mhm.
line. Now, if you look me up and do some due diligence, you're going to find out you're not going to find any negative
Mhm.
complaints or comments or reviews, because I just don't promise anything I can't deliver,
Mhm.
right? So I take a very personal approach to make sure that people are handheld, and
Mhm.
we ensure that they're going to succeed and do what it takes. But it is a process, and it's very objective, and it's not something that people say, well, do I have to be smart for this? Well, I don't think I'm smart enough for this. It's got nothing, if you the less intelligent you think you are, probably the better this is going to
Mhm.
be.
Right. You're
Because
not going to overanalyze. Mhm.
exactly, because people who are very intelligent, they know they're intelligent, they're academically,
Mhm.
they tend to take something and they want to go beyond the
Mhm.
simplicity of, here's how to do this. They start to want to reverse engineer it. They just waste a tremendous amount of time. This is not for that person. If you want to sit
Mhm.
and put your own spin on it, it's
Mhm.
not for you. If you're good at following directions, listen, you don't have to be the sharpest pencil in the box to do this, right? But that's the process. You get to learn through a little mini course. It's free, marketforecastingacademy.com. Get access to that course. And then at the end, if you want to go through the evaluation, you feel you meet the criteria, I'll be happy to meet with you personally, and we'll see if this is a good fit, and we can talk
Perfect.
about the options from there.
Great. Well, so how does somebody connect with you?
So again, I think the best way is marketforecastingacademy.com
Mhm.
is an ideal place to go. I'm on LinkedIn. You
Mhm.
look me up, Roger Khoury. That's Khoury. But those are two places you can connect with me. But I think ideally, rather than reaching out to me questions, all the questions are really answered in the course.
Mhm.
So the best place is marketforecastingacademy.com, and they'll get all they need there.
Perfect. I love it. Well, we have to do this again because I didn't even get through my notes. And so, we'll definitely do this again.
I
Maybe
love it.
after we've come out of COVID and after we've come out of the recession, right? All of those things, because it's like, right, whatever. There's a financial guy I listen to on the radio, and he goes, recession every time he says it.
Great.
Because yeah, maybe not. One of those things. But yeah, so we'll have you on again. But in the meantime, do you have any final thoughts that you want to leave everyone with?
I want to just really inspire everyone to don't look at things or opportunities that are likely to make money. Look for opportunities that are not likely to lose money. Shift your focus away from the goal of I got to make more. I have this. Goals are. It's good for you to know what your target is, what your goal is supposed to be. Like, what do I need to make, 15% a year, or 20% a year, or 30% a year. Fine. Just know what it is that you need to do. Okay. But once you figure that out, don't focus on trying to make it. Focus on a process that delivers those outcomes for you, right? By just applying the process properly, because it's a process that delivers the results. That's the key. We look for process that delivers the results we need. Don't go after, how do I get, I'm going to try to get this, get that. Don't do that. Look for a process that will get that for you.
Perfect. I love it. Well, Roger, I can't wait to have you on again. I am Deb Creer, and until next time, have an absolutely fabulous day.
Tune in for our next program for even more trends, best practices, and techniques for how to make your business a success. The Business Power Hour, hosted by Deb Creer, is proud to be part of the C-Suite Network.